I'll obviously send out the dates for the next couple. I think we have 2 or 3 more left. Tonight's presentation is going to be about sales and trading. We're very happy to have Alex Herman come and do the presentation for us. And although he's not on Wall Street yet, he will be in a couple of months. And Alex is one of my very favorite students. He's very near and dear to my heart. He was last year's winner of the Next CEO, and he was on our committee for this year. He's been instrumental in making that a better competition. He's going to talk to you tonight about how you can set yourself apart from all the other kids that are competing for the same kinds of jobs. Alex did his first internship working with NASDAQ as a sophomore, and then last year as a junior, he did an internship with Goldman Sachs in sales and trading, and that's where he's going to be starting full-time when out.
July 14th.
July 14th. Okay, without further ado, Alex Herman.
How's it going, guys? I'm Alex. You all heard Morgan talk last week. She's kind of like the prototypical banker. I wouldn't say I'm really the prototypical trader, so don't really take this with a grain of salt if you're like, oh, that's not really me. I'll get into a little bit about all that stuff, what it takes to be a trader or a salesman. I'm a trader, so I'll talk about sales, but once again, take that with a grain of salt. I've sat there, but I haven't really done any extensive work, but I'll explain that to you. Please interrupt me at any time and ask questions. I'm really open about everything. So just ask me anything. So we'll be talking about sales and trading today. This is a little bit about how the presentation is going to go. I'm going to talk about what it is, give you a little bit of an example of what you'll do on a daily basis, though it's really different for everyone. Talk about what the career is like, my personal experience, and then there won't really be an assignment yet, but we'll pretend that it's up there.
There will be an assignment, but it won't be up there today.
So this is kind of the structure of sales and trading. At least I worked at Goldman. This is how it was set up. It's a little different everywhere. What happens is there's a buy side and a sell side for sales and trading. Buy side is like Prudential, Financial, anything like that. Anyone you know, any hedge funds, any mutual funds, any private wealth manager, anyone who picks stocks is on the buy side. Then the sell side is the banks. It's where you'll work in sales and trading, at least initially, most people do. I guess you could get a job on the buy side too. This is a little bit how it works. So a salesman at the bank will have clients. It's like a client-based business. You'll have 10 hedge funds or 50 smaller mutual funds. And you'll talk with a private wealth manager every day. Managers get their market color from salesmen. When you look at the stock market now, you follow on a broader basis, say, you see like, oh, I think the market's going to move in this direction, or we're going into recession. Well, salesmen and traders and sales traders see the market every day, and they see second-by-second movements. And so that's why private wealth managers call salesmen. They want to see market color for that day. These salesmen are the people sitting at the screens. They see, well, this stock is moving down on this day. It looks like there's pressure, or it's running up lately. And so this private wealth manager will be like, oh, I really like this stock. When do you think I should buy in? And this is kind of the color a salesman will give them. Like, I see the market going down today. I'd wait a couple days. Or they'd be like, listen, I think you should look at this stock. So private wealth managers depend a lot on their salesmen. They're idea men. You are the bank's bridge to these wealth managers. So that's pretty much what a salesman does. They'll pitch a specific product. I'll get into a little bit about that later. And then a private wealth manager is the one who picks the stocks. So that's the investment-focused side of trading, sales and trading. Then it goes to the next level. That private wealth manager takes that idea and they say, I do want to buy that stock and I want to buy it today. So they won't actually do that. They're the, as I said, the broader-based choosers of stock on like a more fundamental level. Then he has his own trader who's responsible for getting him the best price. So how does that trader do that? He then calls the bank back and he deals with someone else called a sales trader. Sales trader is kind of like his color man on the market. Same kind of thing. They talk specifically like when you want to buy in, what price can you get me? And so the actual buy side never talks to a trader. Traders really talk to no one except hedge funds. They're kind of secluded at life. But so then they'll talk about the price. They'll be like, what price can you give me? That sales trader will go talk to a trader. Trader's the one with the ultimate responsibility for the bank. He controls the flow of money. You don't really have a pool of money. I'll explain this. It's not like they don't give me $1 million and say make money. It's not like that. Your capital is pretty much limitless. There's no pool. You just move money in and out. It's kind of a weird situation. So that's how that works. The sales trader will call and be like, listen, Prudential wants to buy this stock at this price. What can we do? Trader will be like, I don't want to give them that price, because these two people have very different goals in life. They want to make them happy. That's their only goal. That's their client. They're commission-based. They just want their clients to do all their trades through them. This guy makes money on what that price is. So there's a little bit of a strange situation in sales and trading. Salesmen and traders have different pulls. They yell at each other a lot. It's not always the friendliest relationship. So you got to find middle ground, because everyone works for the firm. Your job is to keep the firm's clients happy. Like Prudential just doesn't do trading through Goldman. They do banking. They do all these other services. So you really can't piss anyone off. So you got to be nice. So that's basically how trading flows. Salesmen and wealth managers talk about the investments. Sales traders and buy-side traders focus on the price. And then the actual trader at the firm, that's where I work, is the one who executes the actual trade. So here's a little bit the difference between sales and trading. Salesmen, as I said, are very client-based. That's their only job. You keep people happy. You go out and meet with your clients. You're the ones, you take your clients out. Not as much as like a wealth manager, but you are the entertainer there. And like I said, you provide the market color. You're the one, you have to be very conversational. You have to enjoy talking to people every day. And it's give and take. You also get a lot from them. Like people running these funds are some of the smartest people in the world. So you like bounce things off them too. So it's an interesting relationship. And then, like I said, they also kind of work as research. The best salesmen and the best sales traders, they'll be like, listen, I've been investigating this stock. I just want to tell you what I've seen. What do you see on this? And so that's really cool. So you get a lot of market color there. Trading, on the other hand, it's all about money. It doesn't matter who I keep happy. It doesn't matter how many trades I do, who does it through me. It's how much money can I make the firm. You're paid based on how much money you make. You're promoted based on how much money you make. And you're the decision maker. All the risk sits with you. Really, the difference between these two positions, they both have to know their products, like the same amount. This guy sleeps well at night. He knows when he comes in tomorrow. It's a new day. It doesn't matter. He can go call everyone again. This guy knows when he came in, he could have lost 50% of everything he's made in his life. So that's a little bit, it's what you can deal with. And it's not really like that. I'm not bothered by things, so I go home and sleep. But that's the difference. He's a market maker. These traders are what keeps the market moving. When you see online what the stock price is, all this buying and selling is because traders are putting prices out there. That's the only way that the market keeps moving. You saw this last week with Morgan. These are both front office jobs in sales and trading. So you're at the forefront. And then these other jobs are really to help you out. Middle office sales and trading is a really important job. You're the ones that make sure the trades go through. As a trader, when I click stuff, I just click, I say buy, it says it went through. I never see it again. I don't see it again for 24 hours. I don't know whether I'm making or losing money, really, during the day. At the end of the day, someone in the middle office goes, make sure all our trades match. Like if I said I bought 500 shares, there better be someone else that said they bought 500 shares from me, or you're in trouble. And so that's what the middle office does. They tell you how much money you lost or made. So that's an interesting relationship too, when someone else is telling you how much money you make. And a lot of people move from that up to the front office. So if it's something you like and you can get in, definitely jump in. Middle office is a much more interesting job here than a lot of places. Once again, you're product focused. You have a specialty. You know the product probably better than anyone else. It's probably easier to move from middle office to front office in something you love than it is to move like laterally within the bank to a different product. So that's a little bit about where it sits in the firm. Sorry, I'm still a little dehydrated from spring break, so I need water. So this is how sales and trading's split up. And I've only worked at one place. I've seen a bunch of trading floors, so it's very different. But basically, you're going to be specialized. Salesman, trader, you're going to be very specialized. You're going to be an expert in something. It's not like going out and picking investments. You're going to be one of the 100 people in the world who knows the most about what you're doing. You're watching it for 12 hours a day. So this is more or less how it's split up. When you think about Wall Street, you think about stocks. And more, sales and trading is just not stocks. especially trading, there's almost zero people who trade stocks for a living. It's not a thing in this profession. But equities has grown beyond that. There's stocks, futures, options, ETFs, and indexes. And more of trading in equities is moving to futures and options. And if that's something you're interested in, I definitely suggest getting involved with it. That stuff's crazy. ETFs are like baskets of anything. You can buy like the technology sector of the S&P. You can buy gold, indexes. I sat on an index desk. I'll talk about that more later. S&P futures. And more that's moving the market. There's like trillions of dollars traded in that. And it blows like stock trading out of the water. Then fixed income is actually a much larger percentage of Wall Street than stocks. It's not even close. And that's bonds, treasuries, corporate bonds. You can work anywhere in there. The thing that I worried about when I went to Wall Street, especially after working here, is a lot of the fixed income stuff doesn't seem like it has a story. That's why I really liked stock picking. That's why I liked investing. I liked looking at all the different stories. You pick out stocks that you really like. Fixed income doesn't really seem to have that until you dive in. Certainly corporate bonds, bonds of companies, you have that story every day. And even, I'll get into it later, I'm trading cash loans. And counterparties in cash loans are all different too. So you can really find there's something interesting in all these things. And so interest rate swaps are the big thing now. CDOs. You've all seen the mortgage stuff. All the mortgage trouble is from traders in here. Those desks don't exist anymore. People who were trading collateralized mortgages. When I was sitting there this summer, they were just sitting in a corner. No one calls. No one trades. You can't get rid of your stuff. You just sit there with it. So that's fun. So the landscape changes a lot. The hot desk, if you think you're going into the hot desk, you have no idea in 2 years what is even going to be there anymore. CDOs, exotic credit, all that stuff is gone. And that was by far the best place to work for the last 3 or 4 years. And then last is commodities, which I think are really interesting. I got to sit there for a little bit. And that's your metals, energies, hogs trading, orange juice trading. Most things in movies resemble commodity trading a lot more than anything else. And I'll show you that a little bit later. And currencies is not really in commodities, but that's another thing. If you want to see people who don't get to sleep, be a currency trader. Your position never closes. They're traded 24 hours a day around the world. So those people never really sleep. At 4 in the morning, your stuff's moving in China. I don't think that'd be very fun. So when you think about trading, you probably really don't have a good idea of what it's like. I know I had no idea what it was like. It's changed a lot. Everything used to be at exchanges. People think of the New York Stock Exchange, that huge building with the flag in New York, and even NASDAQ has a building in Midtown. There's nothing in there. It's an empty building with a big red button. It's just for promo shoots. And then these are the two commodity exchanges. And so it used to be, a trader used to be someone who went and stood there. These are traders. This was the job of a trader. And 95% of these people are out of work now. No one does this anymore. This is what, if you've ever seen Trading Places, this is always what I will think of as a trader. And when I went to the New York Stock Exchange, there's just no one there anymore. These were all the traders for everything used to be here. And it's still like this some places. Not everything's traded on exchange, but this is what the New York Stock Exchange looks like now. No one walks around with pieces of paper. It's all handheld. They have palms that do the trading now. There's no yelling. They just like throw paper on the ground so it looks like it's busy. It's not even really like that anymore. And this is actually what a trading floor looks like in New York. You don't have a desk if you're a trader. Like if your mom gives you like something to put on your desk, there's not a thing. You don't even have a cube. It's computer after computer after computer. And it's funny, the more you look, the more important you are, the less computers you have. Kind of ironic. When you start working, you'll have 8 computers because they'll be giving you a lot of stuff to do. When you're important, you just want to look at the overall stuff and sit there. But this is what a trading floor looks like. My trading floor is a little broken up. Goldman's moving next year, and then there'll be one trading floor. It'll be the biggest in the world with 1,000 people on one floor. So it'll look more like this. But this is what it's like. You're just sitting, the people next to you are doing the same thing. The day's crazy. People are running up and down these hallways. There's some days that are special on the trading floor, like indexes reshuffle and stuff. And CEOs of the company will just walk around the floors like throwing footballs and talking to the guys. It's a lot different than working anywhere else. People are yelling over the system. It's kind of like being at a football game when there's announcements. Like the things that seem really boring now, when they come out with retail sales at 8:30 in the morning, you'll just hear people going crazy. Traders just like bet each other on the floor what it's going to be. You'll hear yelling because all the markets don't open at the same time either. It's not 9 till 4, whatever. They all open differently. So people get really excited at different times of the day and it'll throw you off. People curse over the intercom, over the system. That's really awkward. You're not supposed to do that, and people just yell into this thing. The chief economist will talk to you. I don't know if they have it on these. I'm trying to see.
Is that actually Goldman?
No, I don't know if this is nice. These are Macs. This is not what my trading floor looked like. This is like nice and open. They should have like a hoot. There's a system that connects everyone, and so like the chief economists, the guys who you hear on CNBC, have direct lines to everyone. When stuff comes out, they'll give you color. It's pretty cool. You get all the stuff first. He'll talk about it, and then they'll put out the reports like as soon as they talk to you. So it's kind of a neat experience. As you can see, why would they sit everyone like this? The whole market really moves together these days. It used to be like, oh, if you want to diversify, you could buy something in Asia, or everything moves together. So more and more, these trading floors are becoming smaller so that you can communicate. Like this summer, people didn't know what was going on in the credit market who have worked there for 40 years. The indexes for credit is what you have to trade if you want to go short. If you don't want to buy, like no one wants to buy these mortgages, but you can't really short a mortgage. So people were shorting indexes on mortgages, and other traders didn't know what was going on. Like if there's not communication, it's really bad. Everything moves together. Like the credit markets moved everything this summer. So everything's getting closer. People ask for updates. Everyone uses Bloomberg when you're a trader. You email through Bloomberg. People use instant messenger. I thought that was pretty funny. They talked to like 50 people at once. Brokers, like the most high-powered hedge funds, make their trades over instant messenger. And your word is your bond in trading. It's really funny too. Like if you say like $56, someone says done, like you're liable for that trade. Like no one backs out. Like if you tried to back out, you should hear people yelling on the trading floor. It's not a pretty sight. So it's crazy how fast it moves at times, how much it's like that. And then like lunchtime, the market doesn't close, but everyone just sits there. It's kind of an interesting dichotomy, like Friday afternoons, no one trades. People get really mad. The market was moving this summer at the end on Fridays. People were pissed because they couldn't go home. So that was fun. So why do you need all those screens? So this is kind of an example of on one screen of what you look at and why you need more than one screen. So really nothing is done, like I said, no one's saying there with papers anymore. To make a trade, you want to go to a centralized location where you can meet other people trying to make trades and easily get that information. Like if I want to buy 500 of something, I want to know who wants to sell it. I want to know how much they want to sell it for, and I want to know it immediately. So this is a little bit about what it looks like. This is a broker screen. That's what it looked like in what I trade. So there's a broker whose only job is to get prices from people. They have a good job. You should be a broker if you can. I don't know how you get that job. They just talk to people and post the prices that they said. They take no risk. They don't do anything. So that's a broker screen. Like these are different, these are 3-month futures on like aluminum and stuff. And so that's what it'll look like. It'll just tell you what it is, the date someone posted it, and a bid and ask. And I'll get into that in a minute. And that's how you buy. Top one is like what your position would be if you traded options. So that's how you know how much money you made or lost. You can only they can only kind of understand that. That really doesn't mean anything. Like I said, at the end of the day, someone in the middle office will compute what your position's really worth from that and then tell you. So you got that on one screen. You want to know where you sit. This is what it looks like when you want to buy. This is kind of like the actual. This is like these two are like broker screens if you wanted to purchase. Some are automatic exchanges. NASDAQ now, completely online. It looks like this. And you can just see, I'll get into market depth too in a minute. You can just look and see what you want to buy, who's selling it. And this is really the advantage. This is why people are sales and traders and why banks can make money now. You have all this information that no one else has. Like I can see who's buying and selling. I can see stuff move in the market, and that's what's valuable. If you went on Yahoo right now and you just saw the price jump $2, you'd be like, I can see who's doing that, where the price is, when the price is swung. And so that's the value inherent in being a trader for the banks. You really see the movement every second of the day. Now I'm going to talk about, this isn't really how you make money in trading anymore, but this is the idea. This is why they existed. You make money off the spread. I'm really a market maker in its like most basic sense. When you trade, you do one of two things. You're a flow trader or a prop trader. Flow trader, your job is to just like, whenever someone calls you, you have to give them a price. That's your job. You make them happy. And so I have two choices when someone calls me. Someone calls me and says they want to sell 500 shares of Google. I might hate Google, but I'm going to give them a price that I think I can unload it for. So I'll be like, oh yeah, $500, I'll buy them for you for 400 bucks. They'll sell them to me. Now I'm sitting there with 500 shares. I don't really want 500 shares, or maybe I do. So I have two choices. Ideally, I'd like to unload that immediately for like $41. I've just made $1 profit. I've done absolutely nothing. That's like the best case scenario. And that's what traders did for a lot of years. So you call me, they'd be like, people don't want to tell you what they're doing in trading. That's when they say like they're good poker players. No one wants you to know what they're doing. So if I called and I wanted to like buy Google, I wouldn't tell you that. I'd be like, tell me what you'll buy or sell at. So then you'll give me two prices, and that's called the bid ask, and that's the bid ask spread. They'll be like, listen, I'm willing to buy for 40 and sell for 41. And then they'll be like, done at 41. And you won't know which side they're going on. And that's how it works. And that's how traders used to make money. If I can buy at 40 and sell at 41 always, I'll just take that dollar all day long. Just keep making trades with me, millions of dollars. Buy it from one person, sell it to the other. And that's how traders used to make money. So here's an example of a spread. And this is kind of ideally what I'd like to do. I'd like to buy 500 at 40.30 and sell 500 at 41.80, make $1.50 immediately from doing nothing, and then go on my way. I've taken no risk. I don't hold anything. It's cost me no money. I didn't use any of the firm's cash. But that never really happens, especially not anymore, and at least not for a real trader. On an exchange, that's what an exchange does. It just matches buyers and sellers. But so why do people call me? They call me for things that aren't on exchanges, things that are harder to price, and things that they need to know a little bit more about. So as you can see, that's a big spread. Nothing trades at $1.50 spread. That'd be taking no risk. I made $1.50 and I can do that infinitely. So that doesn't happen anymore. So many people trade, the spreads have shrunk to nothing, like hundredths of pennies. So I can't make money doing that anymore. So now it's moved on a little bit to this. And this is a basic, you'll do this in any trading job. You're really going to be a prop trader no matter what. You're going to be like, this person wants to sell it. I like the other side of Google. I buy it and I hold it. That's really what a trader does. And so why do I make more money than other people? Still, like you saw that spread, if you want to buy a stock, you have to buy it from me for 41.80. If I want to buy it, I buy it from you for 40.30. So I automatically start $1.50 better than you. So that's why it looks like traders do really well. That's like your advantage. You get that spread. But that's not big anymore. So how do people make money now? There's something called market depth. This is what it looks like this is what NASDAQ does. This is what New York Stock Exchange online exchange does. It'll look a lot like this. People will, me too, but also a hedge fund or a private wealth manager or anything will say, listen, I'm willing to sell 100 shares at 40.30. And now I see who's willing to do that, which is good to see. You'd like to know what people are doing in the market. But let's say someone calls me and they want 5,000 shares of this. As you can see here, it gets pretty quickly, the price changes a lot. That's called market depth. So if someone wants to buy, ideally, the price you see online is the top price, 41.80. That's what it says on Yahoo. What you don't know is how many shares you can get at that price. That's what these screens do. It tells you can buy 300 shares at that price. Someone wants 5,000. If you just count down here, there's not even 5,000 shares up here. And the price increases very steadily. They don't want to do that. You don't want to move the market. As soon as I bought how many shares are up there? 8, 12.50. Okay, so if someone wanted to buy everything that's up there, it would cost, for the first 100, 41.80. For the second 250, 41. So the average price they get would be fairly high, and they just push the market in one direction. You don't want to do that. So what they do is they call a trader. They'd be like, listen, what can you get me 5,000 shares for? And I'll look at this. I'll think about what I think the stock's going to do. If I think the stock's going to go down, I'll tell them oh yeah, I can get it for you for 41.80. I'll wait till it goes down, buy it for 40 bucks, and then sell it to them. And that's how traders make money today. I promise you a price. And then my job as a trader is to get a better price than that, and I make the difference. And that's how traders make money today. So I'd give you a price of, I can get you 5,000 for $42, and my job that day is to get 5,000 shares for less than that so that I make a profit. And that's really called block trading. That's the only reason stocks are still traded. Like, if you trade stocks, that's what you do, except it won't be 5,000. People want like 10 million shares. And you can see what that'll do to the market. As they buy, they'll be pushing up the price, and it'll be costing them more and more and more and more. So this is how they get around that. Someone like me takes that risk. Now I have the price risk. They know what price they're getting those 5,000 at, and my job is to make sure I get it for less than that so that I make that difference. And my job's not block trading, but that's what I have to do every day. We promise people prices, and it's my job to make sure that I'm a better trader than at least half the people out there so that I make less money than that. I buy it for less money than that and sell it to them. That's what market depth is. And then the other way is you're just a prop trader. Everyone's a prop trader now. When people say like these banks are like a hedge fund, I mean, yeah, that's what they are. It's the same thing. You're investing. When you have to take the other side, they have books. It's called a book when you're a trader, by the way. Sorry, I didn't say that. Your book is everything you own. So they have books of like thousands of positions that you just hold one side of. And that's really how you make money, and you get a percentage of that. And that's how trading works. If you're a flow trader, so your job is to constantly put out prices, you'll make a bigger percentage because it's harder to make money doing that. And if you're a prop trader, your job is just to make investments, so you'll make a smaller amount because you're investing with someone else's money. So that's a little bit about trading. Last week, Morgan talked to you. As you can see, from me blithering here for 40 minutes, I'm not really like Morgan, per se, personality-wise. It's just different. And like, that's what makes you good at your job. Like, her personality is what makes her great at her job, and mine is hopefully what will make me good. So this is what she showed you last week for an investment banker. Someone who's very project-oriented, someone who can sit there and work on something. Eventually, you have to be creative. At first, you really just type stuff up. But, so that's the difference. You could tell, like, I couldn't sit in a room for 18 hours. I would be very bad at that. I need something to do, and that's why I'm a trader. So this is what she said, and this is what I would put up for sales and trading. You have to be very focused. You're there for 12 hours, and you're staring at numbers on screens. Like, you have to be able to pick out of those 12 hours the 45 seconds that are important in a day. And so that's a different thing. Like, you have to have the personality for that. I like having something to do all the time. So that's why I got into it. You have to be analytical. You have to be mathematically inclined. I haven't taken a math class in 6 years. And so people will ask you about that a lot, but I think I'm pretty good at math, so it doesn't really matter. But you have to like the math part of finance. They'll ask you a lot of math stuff. You have to be very driven on your own. They want competitive people. It's you against the world in trading, more or less. If you're winning, someone else is losing. Like, you're not, that money's not coming out of thin air. So you have to be into that. You got to like that challenge, and you got to be willing to take your losses in trading and still not let that. You still have to believe that you were doing the right thing while you're taking those losses. If you win 51% of the time and you lose 49% of the time, you can be a good trader as long as you're winning on the right bets. And so that's the mindset you need to go into trading. You have to be willing to take your lumps. You have to believe that you're doing the right thing and keep going forward. And it's an interesting thing. The market knows more than you. That's an interesting thing when you're a trader. You'll be like, you can sit there, you can say, this should go down. You can sit there for 3 weeks and say, this should go down. Why isn't it going down? Stock's moving up. The market probably knows more than you. It's the combined knowledge of everyone in the world. So that's a very humbling thing when you sit there. Like, you'll see that fast, but you only got to be a little better. And so that's really what trading's about. I would focus certainly on competitive stuff. They ask a lot. I got asked like why I didn't play college sports and stuff like that. And you just, whatever you can do, anything competitive for sales or trading, because it's really self-motivated. You have a boss. Your boss is trading for himself. No one's like saying they're coaching you. No one's like you're doing a bad job. No one's like congratulations. It's just not like that. You have to be very, very self-motivated, and you got to want to do it yourself. So I'd certainly encourage, if you're into trading, do anything competitive you can do here. I did the Next CEO. There's case study competitions here, Johnson & Johnson, like PNC, USC hosts one that we went out to. Do anything like that that shows, they really want to see that you can be driven on your own, that you're competitive. Even if you play like IM Sports here, just you got to show them that you love that stuff. And so I would definitely say get involved in that. We have a trading room here. Looks a lot. I mean, it obviously doesn't look like that trading room that was up there, but granted, you got a lot of TV, computers. You got Bloomberg up there. That's what they use. We can't make trades on that Bloomberg machine, but you can actually, you can look at a broker screen on there and see the prices. And if you had an account on there, you could make trades on Bloomberg. Like, you're seeing what we would see at work. So really use that room. Definitely join the Penn State Investment Association. I was a manager in the Nittany Lion Fund. Definitely do that. Trading internships, I'll talk about in a minute, are a little different. They want to know if you can handle that pressure. Like, when someone gives you money, what are you going to do? Like, are you going to mess around? And so they can't say that anymore once you've done this stuff. Like, you've had money in your hand, you've been answering to someone. So I would definitely say get involved in things like that. Morgan talked about investment banking interview questions. It's pretty much exactly the same. It depends on who's interviewing you a lot in sales and trading. Salesmen tend to be a lot nicer. Like, they have to talk to people all day. So they'll be like jovial and very conversational. Traders sometimes like go for the throat in interviews. It's a little different. Pretty much the same as investment banking. If you look at her list of questions, you still get brain teasers. I really didn't get brain teasers, but you can. Some math questions, be ready. They're going to ask you, I mean, you won't necessarily get it, but if you do, they want you to answer those the same way as like brain teasers. When you answer brain teaser, like, oh, just talk your way through it. Same thing with math. Like, I got asked what's 1/8 of 1% of 3 million. Like, I don't know what that is. That's irrelevant. You got to talk about it the same way. Like, 1% of 3 million is 30,000. Half of that is 15. Half of that is 7,500. Half of that is 3,750. Half of a half is an eighth. Like, they want to see if you can talk it out in that way, because a lot of these products are complicated. Like, you're not building the models. There's PhDs, there's like rocket scientists that sit at the end of your trading rows. I don't know, they might not have had it there. But there's PhDs building the models to give you prices and stuff. That's not what you're doing. But you need to be able to understand what the math is saying so that you can trade the stuff. So, like, be ready for stuff like that. I know people got asked like the square root of stuff. It's the same. You just talk about what you know until you come to an answer, and you'll be fine.
I have a question. I had a student the other day who asked me if you were going to, did you get my email? Yeah. Like, if you were going to do a double major, or you were going to minor in something.
Math or statistics.
Math or statistics.
I wish someone would have said that to me. Yeah, definitely. You set yourself apart if you do math and statistics. I mean, it doesn't matter if you can do it or not, really. That, like, proves, like, no one's going to ask you. No one's going to be like, oh, well, are you good at math? Like, if you're a double major in statistics, people assume you know what you're talking about. Just makes life a lot easier. It makes it easier to think. I mean, I haven't taken math in 6 years, like I said. So when I'm reading math, I couldn't write you a proof on anything if I sat there for 10 years. But I can read it, and I can see what they're saying, and I'm sure it takes me longer than someone who understands math. But, like, you got to understand what the math is doing. Like, if it's saying, like, oh, you got to take, like, the integral of this, I would sit there, I was like, man, I don't know the integral of anything anymore. And you just look at it, but if you understand what it's doing, it's like, oh, it's looking for the area under this. Well, why would you look at the area? Well, it's over the life of the, and so it's stuff like that. You don't really do any math on a daily basis when you're a trader. But you have to be able to understand what's happening, especially with options and these complicated credit products. Like, there's not going to be a price up there. You're not going to know what they're worth. And that's why people call traders. They'll be like, listen, give me a price on a volatility or a variance swap. People, like, there's not an exchange to buy a variance swap. It's like buying really what you trade in options. And so it's like buying the underlying sheet of all the options in the world. And, like, you need to understand what's going on. Like, so why would that go up or down? Well, all the option prices are going up. So it's stuff like that. Definitely any stat classes, any math classes would probably help. I would say statistics even more than math, because option is a lot of probability. Yeah, my interviews were pretty relaxed. Goldman Super Day is like notorious for being scary. I had all salesman interviews. They were really nice. Someone told me my favorite movie was wrong. That was like the worst part of the day. I'm a media minor. Like, they'll ask you weird stuff to see how you react. And just be honest with them. They just want to talk to you. My advice for interviews, the thing that I thought I did the best was I found something at all these companies that you couldn't just look up. Like when I went to Goldman, Fortress was IPO'd. It's like a hedge fund. That's a weird thing, right? I don't really understand how that works, even a little bit. So how do you buy shares of someone who buys shares of? And so I knew that I didn't really understand that, but I knew that Goldman like worked on that deal. So I'd go in and I'd ask, I'd be like, yeah, I've been reading about this Fortress thing. Like, how do you think that's going to change what you do? Like in the industry, and they'd be like, oh, I don't really deal with that, but, and then they talk about it for 20 minutes. And that's like the best thing that can happen. If someone's talking to you in an interview, like you've won the battle. They're not like grilling you anymore. They're not like yelling at you. Like, no, you've like, that's a winning battle. And that's what was great about like the Nittany Lion Fund. When they ask you something and you know what they're going to say, like, well, can you handle money? Well, actually, I managed 500,000. Like, that's a gift. So like, that's the stuff you just want in an interview. And you just hope they talk about that the whole time, then it doesn't matter. People are really nice. If people want to be jerks in interviews to you, they're going to be jerks. I mean, there's nothing you can do. Like, don't feel bad. My first interview was like, my first one was really good, and then I went to the next guy, and it was like horrible. It was like the worst. And I thought every interview was going to be like that. I got really worried. Just like, if someone's going to be a jerk, they're going to be a jerk, and that's it. And just move on. Like, don't let it bother you. Listen, like, what did they ask me? Like, why would they ask me that? Learn from that. Interviews, like, they suck. Like, it's like a test with no book. There's a limitless amount of information. It just doesn't matter. Like, you can't get beat up for it. You just got to do as much as you can. And then you realize by the end how good you become at, like, talking to people about nothing and how good you can, like, you start throwing things in when people don't ask you them. Like, I memorized all this like, stupid economic indicators. Like, no one needs to know that. Like, you need to know when they're coming out. I knew, like, what retail sales was. Like, who cares? And so then I get mad, like no one's asking you that, like you just wasted like 10 years. Then you'd like throw it in, you'd be like, so what do you think about the market? Well, retail sales just went down. And, like you just start throwing stuff in like that. And, like you don't need them to ask you. And so just prepare for interviews the best you can. Really know why you want to do something. Like that's important. Know why Penn State. Make everything a story. I'm pretty good at that. I just make things up. So like why did you go to Penn State? Like no one picked Penn State because they thought there was like a great path to Wall Street, or like you just didn't think about that. Like I wanted to come here to watch football games. Like you can't say that in an interview. Like that was the deciding factor between this school and other schools for me. I was like, I wanted to watch college sports. You can't say that. So you say like, Penn State offers big classes and little classes. I like that. I can work in all these environments. Like just make everything into a story. And that's what I did. That would be my advice. Really know why you want to do this. So like, so if you want to be a trader, they talk about like trading as a sprint and banking as a marathon. Like if you just like, I like having something to do, like I'm really driven to do things, like I want to be busy all day. It's like, it's intense for 10 hours, that's what it is. And I personally would rather do that than be like kind of intense for 18 hours. That's just not, like I can't stay like amped up for that. Like I have adrenaline for like a while, I can do it and then I'm done. And so just know why you want to do it, look into it. The difference between salesmen and traders, like if you're thinking about it, you don't need to pick that. It's actually frowned upon where I worked. If you say like, I know I want to be a trader, they're like, how do you know? Especially coming from here, they're like, oh, you can't know that. So go and they'll let you sit on both desks. Salesmen are much nicer in general, like really nice people because they have to talk to people. You gotta like you're just talking, like you're friends with people, you're talking to the same people every day, like you have to trust them. So, but you're still like, you're a product expert at the job. It's like this, you know the same things. And then to be a trader, you're the one with all the pressure and the risk, which is why they don't seem as nice when you go and talk to them. But it's like a cool job. What I really liked about it, like I love to watch sports. I felt like all they're doing, they're like just gambling on sports all day. And like that could be a cool job. You're just talking to other people who do it all day. Like you know the most out of anyone at it. Like you should be the best. It's your job to know about this stuff. So I just thought that was kind of a cool thing. And so that's why I went into trading. And so this is a little bit about my experience. Everyone has their own path to Wall Street. I did horrible at networking until I started working in New York. Don't do that. It makes it much harder. Talk to like as many people as you can. They can only help you. Like more people you know, the better. And so I worked for my dad for 2 years actually. And so I just tried to do things that made it seem like entrepreneurial. Like you gotta find a job where there's something you can say. Like you only need one thing. You have to write it this big on a resume and talk about it. So I worked for it was an ADT alarm dealer for a couple of years, and then I decided it was time to get a real job. And I worked at NASDAQ in New York in internal audit. I'm a finance major. I've taken one accounting class. I don't like accounting. And I did internal audit, and it was like really boring all day. And it was like projects, and it was what I thought banking would be like, kind of, in my mind, even though I've never sat on a banking floor or any of that. But it was like accounting, like I went through financial statements. It was just, I knew it was not for me. Like there'd be times where I'd sit there for 3 hours with nothing to do, and then get like a ton of work at like 4 o'clock, and stuff like that bothers me, and then I can't do a good job. So but I did that. It was a good experience to get up there. It's different than any other job you've ever had. You're like very responsible. People expect you to be good at what you do, even if you've never done it before. Like they're understanding, they'll help you, but if someone shows you something, they think you know it from there on out. So that was a good experience. That showed me what I didn't want to do, and that's just as valuable when you're young. Like that's why you should get out there and get internships. Knowing what you don't want to do is way, way more valuable than even thinking that you know what you want to do, because you can't understand what these jobs are like till you're really there. So then I realized I got that job. I just met a guy, or my dad met a guy, and I just talked to them, and I came up, and it was like not even a real internship process. And that's how a lot of jobs work, actually. That's how a lot of things in the world work. So then this year I was like, I got to go through the real process, and I don't know anyone. You can ask a lot of the other people who are my age. They could call people at these banks and they'd be like, oh yeah, we're going to set you up for an interview. We'll bring you in early. I didn't go that route. I got like dragged out. I did like hundreds of interviews over like a month and a half. It's not quick. It's like a long process. You got to be like ready for the long haul immediately. Like I didn't get an offer for a month and a half, and then I got 2 offers in one day, and then I got offers after I accepted my job for all these other places. It's just like, it's a depressing situation. It's just like it would be really more fun if it didn't work that way. But that's how it always works. So then I went up to Goldman, and I was in a rotational program there in sales and trading. I said I wanted to be a trader. They only kind of believe you. And so right away you have to prove yourself. I mean, you're with people who they assume are very good at what they do. Like, even if you don't come from business programs at like these Ivy League schools, they assume they know, so they won't even ask them. They'll ask you things. They'll be like, do you know how to do this? Do you understand this? So you have to be ready for that. So we had like a week and a half of training that was like all my finance classes in 3.5 hours. I don't know how anyone not in business even understood what was going on. Then you sit on a desk. First desk, they just throw you on. I got put on an options desk. I didn't take an options class here. So I asked the guy before I went there, I was like, what can I do to get ready? And he gave me a book that was like a textbook to read, which was horrible. But I was glad I read it when I sat down, because the more you know right away, in a sales and trading internship, you're not doing anything. Like literally, you do nothing. Nothing of value to the firm. They're paying you to try to get you a job, right? Okay, you get 11 grand for sitting there for 10 weeks, and it's like, can you make it through this 10 weeks without like killing someone or really pissing someone off? And that's what it is for 10 weeks. And really, like, you get hired based on how good, like, the questions you ask sitting on the desk are. Like, if I go back to this trading desk, I'll show you what I did this summer. Where is this? All right, so this is like a trading floor, right? There's not anywhere else for someone to sit, right? Like, I didn't have a computer a large percentage of the time. You, like, sit behind people and watch what they do. And, like, that's cool. You get to see, like, the market move. But you're sitting on, like, you're watching something you don't know that much about. You got to ask questions. And so you got to be ready for that. Like, that's a hard thing to do at 6 in the morning. Like, the last thing you want to do is, like, badger someone with questions who doesn't want to be asked questions. But so that's what the internship is. So you learn a lot really quick about a lot of different things since it's so focused. So I sat on an options desk. I was really happy I read that book. So I could talk to them. Like, they'll be like, can you build this model in Excel? You'll go and do that. You'll come back. Like, you'll watch for a while. And so it's that kind of thing. Like, it's not project oriented. I mean, they'll give you projects, but it's not, you can't trade. It's illegal for you to trade. You don't have a license yet. Plus, I don't think they really trust you with money yet. But, so you can't touch anything, really. So they have to give you things to do that help them and don't bother them at the same time. So they'll be like, listen, I'm thinking about buying something in Brazil. Will you go look some stuff up for me? So you do things like that. And then they try to put you in situations that see if you can be a trader. Because like I said, the Nittany Lion Fund's good. Like, they can, if they go to me, like, can you handle money? I did this for a year. Like, yes, here are the results. Here's this. It's really good. For other people who haven't done that, so they made us do like trading simulations and trading games. They put us in rooms like this, and they had MDs come and sit in the front, and they just call people out and ask questions about stuff like you should have learned, I guess, while you were there. So it's a lot. It's like an interesting internship experience. It's certainly not like anything else I've ever done. It's hard. You got to like prove yourself in an environment that's like really not conducive to doing that. You just got to show these people like how much you want to work. So then I sat on a muni money market desk, which was like kind of cool, except the desk was like playing one hand of poker with all the other banks a day, and that was it. Like you really you made your move in the morning and then it was done. So I didn't really like that. Like I said, I need something to do. So then I moved over in money markets to repo trading, and that's where I'm going to work. And that's trading cash loans. And that was very uninteresting for 2 years when the market was calm. Nothing moved. And then over the summer when I worked there, that's like all the stuff you see. The reason Bear Stearns closed is because they can't get loans through the repo market. Because like they would call up Goldman, and they'd be like, no, we're not giving you any money. And so they had to close their doors. They couldn't open on Monday. So now it's kind of a cool time to be in what I do. My desk also trades like Eurodollar and Fed funds futures. So there's like bets on what the Federal Reserve is going to do. So I thought that stuff was pretty cool. And then the other side of my desk structures repos. A repo is just a cash loan where I take something to hold as collateral. Like if you want to borrow money from me, I'll be like, listen, I need to hold like a $100 million treasury bond because I don't believe you're going to pay me back. And so I don't own that, but I just hold it in case you default, and then I can sell it. So that's what I do, but for everything. So they do it for mortgages. That's why the mortgage market, when they say like the mortgage market, the credit markets are seizing up, it means people have these on their books. And like Goldman holds $1 trillion in assets. They're worth $80 billion, right? That doesn't make sense. Like that shouldn't work. They don't have nearly that much cash. They have $80 billion in equity. And so this is how they do that. They buy things, and then they get a loan and give them to someone else. And that's how these banks finance themselves. So that's what I do. So it's been really interesting now. My desk also structures repos. So I don't know, you heard about banking, like the leveraged buyouts and the private equity deals from Morgan. The reason those hurt the market is because no one wanted those loans then once the banks made them. So they have like $300 billion in loans from leveraged buyouts. And so my desk is trying to structure ways to repo them out too. So it's definitely an interesting time to be in the business. Like everything's really cool. So like all the important people in the firm are at my desk for a while at the end of the summer. So that doesn't happen much. Like they just move. Like you'll see like the CFOs and the CEOs and real high up people getting nervous. So they just come and talk to whoever's most important, like whoever's the most pressing need. I mean, so that's a cool thing when like the chief economist is coming to talk to you, and they're really nice guys. Like they would sit down and talk to me for like a half hour. They were good. So it's definitely like an interesting experience. I would definitely encourage you to go into stuff if you think you might be interested. Rotational programs are great. You really get a good feel for everything. Like I got to try a lot of different stuff. I didn't know what I wanted to do at all. Like when I was saying take a statistics major or minor, like no one will tell you this when you're young. That's why this is really good. Like I wish someone would have said that to me. Like it just makes life easier for you when you get there, and you can really like enjoy the cool things about what you do more. So that was my experience. I think that's the end of my stuff. Oh yeah, your assignment's to be announced. That'll be up later, maybe. And that's me. Feel free to contact me at any time. If you guys have any questions, ask me anything. I'll pretty much answer anything.
I want to go back to your statement about the question on the movie. Clearly the person's trying to get your number. I think it's pretty common if you just walk through that scenario.
Sure.
Clearly they're trying to see if they can stress you out a little bit, raise your temper.
Yeah, no problem. So I was in a room with 2 young people interviewing me, actually. Real young. They're like being real nice, asking me questions. And they look at, I did a lot of film in high school, and they didn't have that here when I went here, so I'm a media studies minor, which looks really weird with finance. It's like stuff you think, people ask you strange questions on stuff like that, especially. Like, I worked at NASDAQ in internal auditing, so like I thought that was pretty good. Like I got up to New York as a sophomore, even by the skin of my teeth, I like dragged myself up there and did something. People ask you like weird, like why did you go into accounting if you want to do this? Like you needed to choose your life very early. And so they ask stuff like that. So they saw like media studies minor, and they look at that a little weird. And you got to make that into like a good thing, so why would you be that? So they'll ask you like questions like, what's your favorite movie? And you're always interviewed by two people in finance. I've rarely ever been interviewed one-on-one, maybe the earliest rounds. And the interesting part is the two people don't really like discuss their strategy necessarily. So it makes it like really awkward. So this lady like asked me, she's like, what's your favorite, I see your media studies minor, what's your favorite movie? It's like, isn't really relevant to that minor at all. So I sat there for a second, and like, you can't say like, my favorite movies when I was little were like Major League 2, and like, you don't want to say something like that. So I was like, what sounds like pretty good, but I mean, like, I'm a 22-year-old guy, I'm not going to say like The Notebook, like, they won't believe that. So I was like, I said, Man on Fire. I like Man on Fire is a good movie, like Denzel Washington, like good acting, like there's action. I think it won an Academy Award, or so I was like that, or A Beautiful Mind. I was trying to think about I was like, Beautiful Mind probably sounds better, but they might not believe me. So I was like, Man on Fire. And the guy's like, oh, like really legitimately interested, at least I would guess, like, oh, I've never seen that movie. And the lady goes, no. I was like, excuse me? He's like, what? So the guy's looking at her now. So this is like when it gets confusing, right? Because you really like think, like you're like, oh, okay, they're just messing with me. But then they look confused. So she's like, no. And he's like, oh, who's in that? And I was like, Denzel Washington. He's like, oh, do you think it's like his best movie? I was like, yeah. She's like, no, definitely not. And like, you're like really awkward, and there's like a pause. And like, the problem is then you got to make a decision, right? So you're not going to argue with them. That's just like stupid. Like, these are the people giving you a job. So there's two ways you can do it. You kind of got to like just try to tilt the direction of like the conversation towards the person who's being nice. Like engage them. And they're like asking you these questions, like go into why. And that's like really what you'd like to do. But you can't like push it. Like, you don't want to piss off the other person who thinks you're just like they told you they don't think it's right. Like, okay, like that's your opinion, right? That's like an opinion. You can't be wrong about your favorite movie. So you just gotta not. You have to look like you're still okay with it. You have to look like, oh, you can handle it. Like, you can still continue the conversation on. Like, if you just sit there and like wait. Like, there's times when you just sit and wait for someone to ask something else because there's nothing that you can do. But as long as you can like keep having a conversation, they'll be happy. And so people try to test you in all their ways. They like think they're doing a great, like these are young. I got interviewed by a lot of young people. Like, I can't imagine really interviewing people like that. So like, it's young people interviewing you. So they're just like trying to do what people did to them. So you just got to like run through it, keep talking. That would be my suggestion. Yeah, they're going to mess with you and stuff like that. That's like the easiest. Like, that's not bad, but you're not going to make me feel bad by saying that to me. So stuff like that, you just keep talking through. Anybody else? All right. See, my office is a mess right now because they're moving next year. So like what I trade moves with bonds, like exactly with bonds. Like, there's a mathematical relationship. They're related. When my market changes, like bonds trade, and the bond traders aren't even in the same building. So it's stupid. Like, it's stupid. It doesn't make sense. And there's other desks where they have everyone who trades distressed, like bankrupt companies. Everyone who trades bankrupt companies is in one area, whether they trade like the bonds, the stocks. So they're like, oh, genius idea. They're all related. So ideally, and a lot of the time, like those rows of desks will be, right? Like this will be all the traders, and this will be all the salesmen for a product. Because a lot of you need to be next to them. Well, sales, I should say, so Goldman's different. Sales traders are the ones that talk to traders in equities. And then in fixed income, there's no such thing as sales traders. There's only salesmen. But that's basically what it is, because they'll be getting calls for customers. They'll just like stand up. They'll be like, listen, John, what can you give me on 100 NASDAQs? You'll be like 40-30. You'll be like, listen, the guy wants 40-50. Like, this is a good customer. Can we do it for him? You'll be like, I can give him 40-40, and like that'll be a deal. And it'll be like done, deal, and it'll be over. And so that's how it works. So usually yes, but then like some stuff, you can just talk to people, or the traders really don't want to be bothered. They'd rather deal with hedge fund clients themselves than salesmen. So like some of them will be here, and then some will be like all the way on the other side. It's interesting. Anything else?
How long did you stay on your desk? Like you said, you went through the rotation program.
3 weeks. It was like a week and a half of training, 2.5 weeks on one desk, 3, and then 3. They're all different. Citi had 10-week, 10 rotation program. So you get to see a lot of stuff. Better impress someone in a week. I don't know. They better remember you after. I mean, I wouldn't even remember people. Most things are 3 rotations, I would say, in trading. That's like the feeling I've got. So, but yeah, it's different. I mean, every bank's program set up differently. There's no like ideal thing.
I know one of the things I was most surprised to find out about was that, the equity market is much smaller than the bond market. And I was just curious, is part of that because just by their nature they're much harder to value and more volatile, or is that just because the bond market itself is
The bond market, well, there's just more money in the bond market, first of all. And when I said that, like, there's still, even though, I mean, this hasn't like changed in the last couple of years. I mean, obviously, all markets have gotten bigger and fixed income has exploded. But even like 30 years ago or 20 years ago, fixed income still had more money in it than stocks. But what happened was, like I showed you with the spread, there's people who can make money like that. So to have 1 million of them sitting there doing that, an exchange does that already. Like what NASDAQ is, there's no building, there's no, NASDAQ is like that colored screen that I showed you. Like this is, NASDAQ is a computer program. I don't even know where I'm on. NASDAQ really is a computer program that does this. Like people put in bids and asks and it matches them when they hit. And like that's what an exchange is now. So that's not a job anymore. All those traders are fired. And you don't, like, you're not going to have someone sit at a computer to make like a hundredth of a penny on trades. So they're just gone. There's no reason to have them. So the jobs in equities are all in like indexes, options, ETFs. It's all like volatility trading, because that's what's not on exchange. That's what like you can't value easily. So they have value. Like when the market was going nuts, volatility is like how much the market swings. And when you trade options and stuff, you don't really trade on price. Once you're a trader, you trade on volatility, like how much you think the market's going to move. And so like spreads on that will be huge. They'll be like 16, 19. Like they don't want to buy and sell it. And everyone would like to like get that. Like you're like, okay, the market's going nuts. Like we know the market's going nuts. I'd like to buy volatility. And like no one wants to sell it to you then. And it moves a lot. And they're huge like notional amounts. Like you're talking like tens of millions of dollars. So that's why they have traders for those. Like you couldn't, the market wouldn't exist. Like it'd be so frozen if there weren't traders for that. There's still block traders, like this example. These are like the only people at Goldman who were stock traders, did block trades, like $10 million, what price can, like 10 million shares, what price can you get me? They'd be like, okay, I'll beat this in 2 days, and that's how they made money. There's just prop desks. You can trade whatever, I should say this. So I'm on the repo desk. I can trade whatever I want. I mean, not right away, people would yell at me, but like when you're older, like you trade whatever you want. You have access, like if you call, like you'll call like the tech desk and be like, listen, I want to be able to look at the broker screen for foreign currency. And you'll have what the foreign currency traders have up on their screen. And so since everything's related, people do that. So people trade stocks. Like on my desk, like the guys still get paid if they make money on stocks, even though that's not their job. So people still trade stocks. There's like prop desks that I'm sure trade stocks. It's just easier to lever now with options too. Like you can just make more money. And so everyone's levered up. So everyone buys options and futures. And so like that's all of equities. There's no, like you wouldn't be able to go there and find like the tech trader for stocks. There's no such thing. There's a tech trader for individual stock options. So that guy trades like Google, Apple, that stuff, options. But there's no one that trades stocks. The job that I can most equate with that, like what we do in the Nittany Lion Fund where you pick stocks, an equities sales trader basically does what we do in the Nittany Lion Fund, except they don't physically take on the risk. But they do basically that same thing. So that's why that was a cool job. Like I knew I wanted to be a trader, or at least I thought I knew. And that was the only time where I thought I might want to do something else, because that was just, it's a neat thing. But yeah, there's just, there's so many, they like make up instruments. So people do that. Like there's something you can buy at Goldman now. There's a desk for it where you can give me any 3 stocks. Like pick 3 stocks, like Google, Bear Stearns, if that was still existed, and like Microsoft. And I'll give you a bond where I tell you like the coupon's going to be based on the lowest return of those 3 stocks. So like if one of them returned 10, one returned 8, and one returned 6%, you'd have bought a bond from me that returned 6%. That returns as a 6% coupon. And it's like really they like just like make stuff up like that and that has to do with how related the three stocks are is the price they'll give you. And so they just make up stuff like that in fixed incomes, and like you can't do that in like stock trading is just stock trading. There's no exotic anything. All right, so bankers are the ones who like make the bonds and stuff, right? They issue the bonds and things like that. But there's it's called structuring, or the financing side of trading. So there's desks, like there's a lot of jobs that are called a trader. I don't know how much they hired for. I was like looking at this over the summer. There's only like 16 jobs that were what I wanted to do where I worked that were like flow trading, like sitting like while the market moves. And there's just like desks called like structured credit exotics. And like they're a trading desk, you're in trading, but they'll like design like a customer will call and be like, listen, I have this risk. Like, can you make me a bond based on like packaging these 8 million mortgages together? And like that desk job is like come up with a price from like an instrument they just made up. And so that's like the structuring side. You have to be way more math-based to do that. You have to be really good at math. I mean, like you're designing these products, and that stuff's pretty cool too. So a lot of people do that, and that's also trading. So like, there's a bunch of trading jobs that are that. A bunch of trading jobs like I'm talking about, which are like flow trading and prop trading. There's like financing of. There's financing for like I said, like that thing I was talking about, with 3 stocks. Like there's a desk whose job is to do that, and you're a trader. Like you make 1 trade a day, but you're a trader. So you got to be, those are like math majors.